In this video, I want to look at Wall Street's forecast for 2024. We're going to look at their S&P 500 forecast, GDP growth, inflation, and interest rates. Get an idea of what is kind of baked in the market for expectations next year. Now, I do buy into the fact that forecast is somewhat folly, but it's nice to know what the consensus is thinking so that any kind of changes to that, you'll have an idea of how that might impact your investments and portfolio. Just think back to 2023. As we entered the year after poor results in 22, economists were really bearish. Most were forecasting a recession in the US. Equity growth was expected to be very, very low, if not negative. Inflation was expected to remain fairly high. And we beat basically all those. And because things turned out so well, stocks did really well, bonds did reasonably well. So I think it could be at least helpful to know what Wall Street is projecting. My name is Scott Caulfield. I'm a CPA and a CFA charter holder and the founder of Sophos Wealth Management. So let's get started. We'll look at the S&P 500. So Wall Street is projecting pretty tepid growth in stocks. So the S&P 500 ended 2023 around 47, 45, so 4,700. And most forecasts are expecting pretty small growth, low single digit on average. So if the median forecast of 4,875 were to come true, that would be less than 3% higher than the end of the year number. Now, some of these forecasts came earlier in December before we had that end of year run in the stocks, but still, these are pretty low expectations. Even the more bullish forecast calling for 5,200, for example, that is not just huge growth. So we're talking about less than 10% growth, even on the more bullish forecast. Moving to real GDP growth. So 2023, we really out-surprised. It ended up being probably close to 2.4% real GDP growth. We don't know the official number yet, but that's kind of where it's projected to come in. And analysts are expecting a much lower but positive 2024 growth. So right now, the number on the Bloomberg consensus forecast is 1.3% real growth for next year. I think that's kind of I think of it as somewhat of a Goldilocks number. It is not too high to stoke inflation, but it's not too low to risk recession. So that is kind of why a lot of Wall Street analysts are excited by that low growth, and it fits that soft landing narrative that a lot of Wall Street is buying into. For interest rates, we're getting quite a divergence between what the Fed is expecting next year and what Wall Street, or I guess the market, is really pricing in. So the Fed most recently came out and said they expect 3 interest rate cuts in 2024. So the Fed funds rate is currently between 5.25 and 5.5%. That is expected to come down 75 basis points next year. So it'll end the year between 4.5 and 4.75. The market is pricing in, we entered 2023 with the market pricing in 6 interest rate cuts. And currently, that's come up a little bit, and the market is pricing in 5 rate cuts. So 2 additional cuts, more than what the Fed is projecting. So that would put the rate more between 4 and 4.25%. Again, quite a bit lower than where the Fed is pricing the rate. And finally, inflation. So most Wall Street firms are expecting inflation to kind of continue its glide path down towards that 2% target that the Fed has laid out. We were getting down in that 2-3% range at the end of 2023. So most kind of expect it to stay there and come down close to the 2% target. There's not necessarily a consensus number, but that's kind of the average, is that we're going to get closer to the 2%, although not all the way there in 2024. Yeah, and to me, this one's kind of interesting. I mean, if inflation comes back to 2% and we get that 1.3% real GDP growth, that's kind of a Goldilocks scenario. And I think if real GDP growth is better than expected, which would seem to be a positive, I think inflation is likely to reaccelerate. In fact, we've already seen a surprise to the upside in inflation most recently reported. So potentially it may be reaccelerating a little bit. On the flip side, though, if real GDP growth is lower than expected, that will help inflation, but then you're flirting with recession. So I think 2024 is shaping up to be an interesting year. I think most of the surprises are probably to the downside. And, for a lot of other reasons, mostly valuations of the stock market, I think investors need to be really cautious entering next year. If you want to talk about the economy or your financial situation, I'd always be happy to schedule a call. But feel free to visit my website for more information and like this video and subscribe to my channel. Thanks a lot.